So far, the question now, is it just a long-standing way to merely meet salary demands, or is it a distasteful method for companies looking to dodge taxes? Joining me now is John Berlau of the Competitive Enterprise Institute. We also have Stephen Lerner, Director of Private Equity at the Service Employees International Union. Gentlemen, thanks so much for joining us. Stephen, let me start with you. Is this a good practice? I mean, should we be concerned about this? It's easy to state it in a way that sounds distasteful. At the same time, it's just another way of financing what you're doing.
Well, it's absolutely distasteful. I think we all have the same reaction when you hear it, that they're paying themselves bonuses based on people dying. But it's not just that. It's another way the big banks and Wall Street enrich the people at the top, avoid paying taxes, and it's part of all the kind of schemes they use that make themselves rich, and really taxpayers end up bearing the burden of it. So it's a problem, it's grotesque, and it really should stop.
John, what do you think? Are they making themselves rich, or are they making their shareholders rich? Are taxpayers paying for this? I mean, there are a lot of allegations in that last statement. What do you think about that?
Corporations are simply buying life insurance policies. In a lot of cases, they're for the same reason individuals do, Melissa. If, say, at Apple, there was concern this year if, God forbid, something happened to Steve Jobs, that the company would lose his sets of skills and talents, and the same is true with other employees. Changes to the law in 2006 now say you can only do this for the top third of earners. But really, I mean, I think, and as far as the tax deductibility, it should be as far as on the table, as far as eliminating the deduction or reducing it in terms for lowering the rates, which are among the corporate tax rates are among the highest in the world. But there are rational reasons that companies have for buying insurance on employees with sets of skills and talents, just the same as individuals have for buying life insurance policies.
Yeah, Stephen, I mean, how rampant is this? Because you can see cases where it makes a lot of sense, where you have somebody who is integral to the company. If, God forbid, something happened to them, it would definitely cost the company money in the short term while they search for a replacement, while they covered the cost of doing business, while they found somebody else. Like, there are situations where there's definitely makes sense. If you're doing it on the top 1,000 people.
Right, but they're doing it on the top third, and before the law was changed, they did it on everybody. And I think what you have to do is look at this in the context of what's going on. Taxpayers include, between the $45 billion and the other guarantees, have $190 billion or $199 billion that's gone to Bank of America. Bank of America finds all sorts of ways in the other big banks to raise fees, to do overdrafts. And I think what people feel more and more is they've got a million ways to get money out of taxpayers, to avoid tax havens offshore, et cetera. And it's all about not how do you help shareholders, not how do you help the economy, it's how do you siphon as much money to the guys at the top. And people are really tired of it. It's a problem, and it's part of, they should focus on how they make the bank make.
But Stephen, is the answer to that they should give back the TARP money, they should de-TARP, or is the answer that they should not hold these insurance policies? I mean, it seems like what you're talking about has to do with taxpayers and taking taxpayer money. It's only relevant if they're a TARP company.
Well, no, it's not just if you're a TARP, but it's part of a pattern of behavior where what these companies are figuring out again and again is, no matter how bad the economy is, no matter what the problem, how do they make sure the guys at the top get as much as possible? And it's really double, triple dipping on taxpayers. Not only do they not pay tax on the insurance policies, but then Bank of America's own employees often can't afford insurance, so the state provides insurance for workers, which then means taxpayers are paying. That what they figured out is how to game the system again and again, and it's bad for the economy, it's immoral, and it's not good for the country.
John, how about lowering corporate taxes so that they're not looking for loopholes? I mean, why don't you go ahead and simplify the tax code, lower it, but take away the loopholes? We could cut out a lot of this behavior.
I would be in favor of putting the life insurance deduction on the table for a lower corporate rate, which again are among the highest, in the developed world. But again, I know there's a lot of outrage at the banks and because of the TARP, and I share some of this outrage. But I don't think we should eliminate this practice that can be useful for companies, not just banks, but Kimberly-Clark and other non-bank companies use this. The Wall Street Journal reported today.
Yeah.
The only thing I just think is important to add here is when you look at how the banks and finance companies act, it doesn't matter what the tax rate is. They're going to try to find a way to avoid paying any tax. And what a lot of people are saying is, Most Americans, we pay our tax. The country has real problems.
No,
we have a massive debt.
Okay.
And there needs to be some tax fairness here. And it's not right that
I think actually the majority of Americans don't pay tax any longer. But that's a discussion for a whole nother time. And unfortunately, we have to leave it there. I do thank both of you.
But what we do know is the guys at the top aren't paying much these days.
No, I think the guys at the top are paying quite a lot. But anyway, we're going to have to leave it there. Thanks to both of you for joining us.
Companies are certainly paying more than their European competitors.
Up next on The Closing Bell.